Howdy there, folks. Welcome into the rare buy one, get two free in this one. 3 videos for me to react to up here in this one. First one up here, NVIDIA and tech stocks will rip higher into the second half of 2023. This is from 7 hours ago, Dan Ives. Now, there's only 4 months left in this year. So if you believe, tech stocks are going to rip higher through the remainder of 2023, you're basically saying tech stocks are going to rip higher over the next 4 months, okay? And so it's been an incredible year for tech stocks. So I want to hear what he has to say, what his reasoning is behind this, and kind of share my opinion and perspective on that one. Next one up here, I think broadening in the markets will continue if the Fed is done, says Jim Liebenthal. This one's from an hour ago. I want to hear what he has to say, kind of share my opinions and perspectives on that one. And then our main man, Mr. Tom Lee. There he is. Tom Lee this morning out talking about the markets and inflation. I want to hear what he has to say and kind of share my opinions and perspectives. So appreciate everybody joining me as always. Thanks so much for being here, folks. I appreciate each and every one of you. Thank you for being subscribed. Also, thank you every single person that supports this channel on Patreon. If you'd like access to my Patreon, check out the pinned comment down there. You get access to see the moves I'm making in that portfolio each week. Plus, you get access to a Discord chat. And in this tier, you actually get a course access as well. So yeah, that will be pinned comment if you want to join us on there. Alrighty, guys, let's get into it.
Big tech from here on out. Wedbush tech analyst Dan Ives, dressed like he's ready to see further gains in these magnificent sevens.
Man's dressed like, no, you're dressed like we're going to see future gains. This man's dressed like he's ready to go to the Kentucky Derby. There's a difference.
Very cheerful outfit today. No, but in all seriousness, I mean, this crowding, some people take that as a read that...
It's like, in all seriousness, like, I can't take your outfit serious, like, in all seriousness.
You know, there's just too much groupthink here, not enough fundamental analysis. It's a sign of potentially a signal to the bears that a downturn could be near. I mean, does any of that concern you at all?
Look, and I think those are all the arguments that the bears are making. I think it just comes down to the growth. I mean, what I believe in, and I think we'll see with Salesforce, I think we'll see with a lot of these off-quarter earnings, Palo Alto, of course. This is going to be a strong fundamental performance from tech, from software, from chips going the second half of the year. And in my opinion, despite the Fed, despite what we see in terms of the 10-year, I think tech powers through this. We see 12, 15% gain second half of the year. And I think it goes into 2024. We believe the new tech bull market is here.
And you got everything you wanted out of it.
Whoa, the new tech bull market is here, right? I'll give you one case on why tech stocks could do really, really well the next 4 months. And it has nothing to do with earnings or anything like that. Although I do think there's going to be several companies that report insanely impressive net income growth and actually revenue growth on a year-over-year basis. Meta, Amazon, NVIDIA come to mind. But that's actually not the real reason. The real reason is there could be fund managers trying to play catch-up into the end of the year. And if you want to try to catch up to the market, if you're lagging the index big time, then usually the thought process is I need to be in tech stocks, right? Because those usually over-index to the upside. If you're in a kind of an uptrending market, you're not usually going to catch up playing oil and gas stocks or industrials or something like that. So if you're underperforming, you're like, I need Tesla, I need NVIDIA, I need AMD, I need those sorts of stocks. And so if you get some piling in there, then you just kind of add on to the gains into the year end.
Yeah, we sat here and talked about it for weeks. You came on, it was an incredible quarter, and then the stock did nothing. Is that a concern to you?
Yeah, I think that was a knee-jerk, no doubt. And I think that definitely scared a lot of investors that I talked to, right? Like, if NVIDIA, the godfather of AI, Jensen, puts up a quarter like that and the stock sells off, what is that telling you? But I believe we sit here 6-8 weeks from now and that stock is much higher. Because ultimately it just comes down to fundamentally, it's unprecedented growth that we haven't seen in 30 years since internet in 1995.
So wait, you said, what is that telling you? So it's not telling you anything? What's the answer?
I think it's telling you that was a knee-jerk reaction that I don't think is going to be sustainable. I believe NVIDIA and overall tech is going to go, we believe it rips much higher into the second half of the year. I view that pause that we saw post, sort of sell-off as more of a golden buying opportunity, not the time, in my opinion, to get out of this, because I believe this is just halftime of a Super Bowl type tech rally that we see going into the next 18, 24 months.
Is there a name in the Magnificent Seven or Mega Cap 8 that you would underweight at this point?
Well, I mean, look.
So the reason NVIDIA stock didn't skyrocket off of those earnings, which were absolutely astronomically ridiculous in terms of how much they just killed it. Even the most bullish bulls got outbowled by NVIDIA's numbers and guidance, right? You know, when people looked at it and they say, well, why didn't that stock skyrocket? I'll tell you exactly why that stock didn't skyrocket on those earnings, okay? The reason being is there's a psychological thought process around stocks that is it as bad as it could possibly be? Is the worst news priced in? Or is it as good as it can possibly be and the story can only potentially get worse from here, but like this is the climax, right? So when NVIDIA reported those numbers, guess what happened? What happened was a lot of people started to think because the numbers were so great and the guidance was so great, there's no way it can be any more impressive than this, which puts a top on the whole situation, right? That's the way some people think. No, NVIDIA is kind of a different animal if people haven't recognized this yet. And so, you know, that might just have been child's play. Even this $400 level, like there's a potential NVIDIA goes to $800 to $1,000 over the next 6 months. Over the next 6 months. I don't have a penny invested in NVIDIA. I'm just telling you, it is a possibility that NVIDIA climbs to $800 to $1,000 over the next 6 months. I have not a dime in NVIDIA stock. There's a potential, though. When you look at how cheap the forward P is, which is incredibly cheap given the growth rates of NVIDIA, okay, that's a whole different ballgame there, right? But there's a thought process of like, there's no way it could get any better than this. There's no way. And that's why that stock didn't just skyrocket initially.
Our top picks have clearly been, if you look at Amazon, if you look at Apple, I think if there's a name that you'd underweight here, look, I think Meta's obviously had that massive move that we believe probably a lot of that is probably not going to be as significant as some of the others. I think the one that I view as a table pounder is Apple, because in my opinion, going into this iPhone 15 cycle, it's massively underestimated by the street just how big this install base upgrade is going to be. And I think Cupertino continues to play chess, others play checkers.
You got Salesforce after the bell tomorrow. We're kind of on a roll with our Wednesday afternoon earnings in August.
You would have said almost every other big tech company except Apple.
But this is kind of a bellwether for enterprise demand. Any expectations on that front with regard to kind of the strength of the overall enterprise software industry?
Yeah, it's what we were saying. I think we're going to see strength from Salesforce. I mean, we've seen an uptick in terms of cross-sell. Benioff clearly backwards against the wall. If you go back even a few quarters ago, bears thought this was a stock that best days in the rearview mirror. I disagree. I think now margins starting to uptick significantly. And I think also when you look at AI, I think many investors are discounting the potential opportunity here for Benioff and Salesforce.
Yeah, Salesforce, I'm certainly looking forward to whatever happens there, but it actually was a stock at the beginning of this year that I was seriously considering about buying Salesforce, such a phenomenally run company. But what kept me from not buying Salesforce at the beginning of the year, I'll tell you exactly what. Every other freaking stock was a sick discount. I mean, even Tesla was so insanely undervalued going into this year, right? Heck, I bought Tesla shares at the beginning of this year for the first time since freaking 2019. Like, it just goes to show you, like, there was just a platter. You know, at the end of last year and into the beginning of this year, it was just a platter of every growth stock you could ever imagine, trading at just valuations that you're like, I can't even believe this is real. I can't even believe all those stocks. NVIDIA, $110. AMD was $55. Meta was under $100. Tesla was $100. Like, everything was just like, oh my gosh, like Amazon's fall, Netflix, back in the summertime, that one bottomed before a lot of other stocks. That one bottomed at, what was it, $170, $180, something like that. Shopify fell to like $25. Like, oh my word, okay. All right, next up here, Jim Liebenthal from an hour ago on his thoughts on the market and kind of where we're headed here.
But I don't know, maybe the tide's turning. What do you think?
Well, in the last 2 weeks, tech is actually up 5%, and that's 35% of the S&P 500 if you include comm services. So I get it. They got oversold, but Scott, XLK is still up 38% year to date. So I wouldn't be surprised to see just some consolidation. What I have been encouraged by is the broadening in the market. In the past month, the XLE has outperformed the XLK by 770 basis points. And the XLI, the industrials, have outperformed the XLK in the past month by 200 basis points. So the broadening out is healthy. It's because the economy has hung in, minus the jolts, although jolts are still well above historical averages. But I understand why the yields are falling on the news today. But I do think the economy is hanging in pretty well. That's what we learned from Powell last week, that the economy is strong, labor market's still tight, And inflation, though, is still persistent. So
I want to see Scott and Stephanie start arguing about something. They always seem to at some point argue about something, and she starts getting, he kind of gets a little snippy, and then she starts kind of
data dependent. We're all data dependent, and that's exactly what's happening today in the marketplace.
Hey, I said yesterday we made this checklist, Jim, of the sort of the things that have to go right for September to not live up to its billing of being this historically weak month, although maybe not so much when you've already had a pretty good run into in August like we've had. And economic data being good but not too good was high on the list. Now, jolts, check, right? Fed wants the labor market to cool a little bit. Confidence, check. Consumers still doing well, but let's not get off to the races any more than we already have. Is now we about to turn the calendar. How do we see this?
Could go either way. I mean, I'm data dependent. The Fed's data dependent. The markets are data dependent. And to your point, Scott, September 1st, this Friday, first day of the month, what do we get? We get the labor report. Everybody's going to be paying attention to average hourly earnings, non-farm payrolls, et cetera, as the first tell for what inflation did. Not a direct reading of inflation, but the first tell of what inflation did in August and what the Fed might do in September. I still think at the end of the day, this is about inflation and the Fed. Although that story's pretty long in the tooth. It is pretty long in the tooth, but Steph made a good point about the broadening of the rally. Okay, I want and you want that broadening to continue. I think it will continue if the Fed is done. If the Fed is not done, we're still going to be doing this hand-wringing about a recession.
We're not going to know, for a minute whether the Fed is done.
Great point.
In the last week or a couple weeks, suggested, well, the mind of this market had changed. It became no longer.
It's a great point by Scott there. We don't know, right? I mean, think about how. I feel like it's been almost a year that people have been talking about, oh, this is the last rate hike. Oh, this is the last one. Like, it's felt like that for nearly a year, and certainly almost this entire year, right? The Fed's done. And then after Silicon Valley Bank, then it really felt like after the whole regional bank situation, it really felt like the Fed's got to be done. This has got to be it. And then they kept going. And so, we've been thinking they're done for like 6 months, 9 months at least now, if not 12 months. And they just go. So that's the problem. You don't know if they're really done. They're not going to announce it either.
The dip market, it was a sell the rip market. I mean, the activity of the last week or so would suggest otherwise.
Boy, how it changes quickly.
That it's back to,
right?
to buying the dip. And by the way, HSBC today says we think this presents a pretty good tactical entry point into risk assets, above all into U.S. equities. We've seen in many respects, Josh, the correction that hasn't happened. We started to get a little bit of an upset in the market, and then
awesome. Josh is on. I didn't realize he was going to be on this video too. Cool.
Conversation was, and all the notes were, all right, we are going to have a bigger correction. We could go down 10%. We're due for it. Blah, blah, blah. Well, the S&P's down 2.2% in the month of August, which was so terrible. Not really.
I have to be honest with you. I think our committee absolutely nailed this summer. We were long and strong through July, one of the best months ever. And then in August, during that pullback, I can't think of any of our regulars in the cast that said anything other than it's just a little bit of sell the news combined with seasonality, and it's August. Like, you're talking about companies that came in, reported earnings with their stock prices up 20% from May, reported amazing earnings, sold off 5%, and people were ready to call for the next bear market. We didn't do that on this show. We don't get everything right, believe me, especially not me. But to a person, Stephanie, Jim, I think we all said, stocks are up a lot. It's okay if they retrace some of that rally on a sell the news reaction to earnings. That's all it was. We didn't get more dramatic than that. And so that's what we're living through right now. I want to say one thing here, just statistically. Try and understand this. The VIX is now sub 15. It's back at 14.5. It's down 4% on the day. The VIX is down 15% in the past week. That entire volatility spike was from the sell the news reactions and earnings. There's no other news that generated that. I'm sorry, but the Fed's speech was milquetoast. It was exactly what we thought it would be, maybe even more bland. So the VIX hit its low for the year in June. That was probably too low at 12. We had a roaring rally in July, and then we gave some of that back.
Yeah, a lot of people have been betting that the VIX is going to spike this entire year. A lot of people have been placing bets and, buying calls on basically the VIX and, doing some of these derivatives to bet that the VIX is going to spike huge, right? The problem is they miss a core fundamental of what makes the VIX spike. What makes the VIX spike is not just people freaking out. It's people freaking out because something transpires that no one saw coming, and it comes out of nowhere, okay? So, good example is Rona, right? VIX spikes massive. Oh my gosh, it's a once-in-a-100-year health event that's actually going to shut down the worldwide economy, and for who knows how long, VIX spikes massive, right? You look at, obviously, the great financial crisis. Going into that, everybody was like, we're not going to have a recession, the Fed, the president, everybody. And next thing you know, all of a sudden, the whole banking system's collapsing. It's getting ugly. VIX spikes in a massive, massive way, right? The regional banking situation that happened earlier this year, that got the VIX to spike a bit. But the problem is, none of those regional banks, most people never even heard of those regional banks before they actually went down. This is no Salomon Brothers and Lehman Brothers and Citibank and all those other ones that were in the whole drama field. Bear Stearns back in the great financial crisis that were super famous on Wall Street, right? So when you look at it from that context, you need something to happen that no one saw coming, right? Look at 2022. Obviously, when Russia made the move, boom, you get a spike up in VIX there in the short term. That's what you need. You need something crazy that comes out of nowhere. No one was expecting it, and it's all of a sudden there it is. And it happens, right? And then you can talk. But everybody that's been betting that the VIX is just going to spike, yeah, you can do that. It's just, that's basically like a lottery ticket. You're hoping that something magically comes out of nowhere. Mr. Tom Lee, our favorite bull, is here. Tom Lee has to say.
Who has been trying to remind people that...
Look at the hair. Holy smokers, that ain't no dang joke. It's so puffy. My goodness.
Inflation's going to roll...
I'm trying to get my hair puffed like Tom. Oh my gosh.
Quicker than you think, Tom. Does JOLTS point to that?
It certainly does. I'd put this in the camp that inflation's on a glide path lower because with lower job openings, a lot of anecdotal evidence that it's been easier to hire and even new job postings have lower wages. That really takes the wind out of someone saying wage pressures are going to keep inflation high. So there's a lot of data this week, but I do think that by the end of the week, we're going to really see a picture of inflation falling faster than consensus expects.
What is the lag between those kinds of prints and the kind of Fed rhetoric that would back it up for equities?
That's a great question, Carl, because we've had
I need to take a screenshot of this and post
a picture of inflation falling faster than consensus expects.
What is the lag between those kinds of prints and the kind of Fed rhetoric that would back it up for equities?
That's a great question, Carl, because we've had some really soft inflation readings for some time and only recently have FOMC members who are very data dependent acknowledging inflation's softer. I think markets are also unconvinced because, if you look at Fed fund futures, there's many expecting a hike in November. I think that the probability now is at 48%. I think that's going to get towards zero if we get the soft inflation we expect. And I think that's why this week is critical. It could change a lot of Fed members' minds.
But Tom, a lot of people read last week in the events at Jackson Hole as being, more hawkish, having a hawkish bias. You disagree with that?
I'm not at Jackson Hole, and I can only go off what I'm reading and from Powell's speech. But to me, there's a huge anchoring bias that I think at the start of this year, the majority of economists and pundits are hawkish and read everything as if it's a hawkish statement. I kind of looked at Jackson Hole, and I thought it was actually a real validation that if inflation comes in soft, the Fed's going to change its view. To me, that's a risk-on interpretation, but you're right. A lot of people saw that and are staying hawkish.
Risk on where? The reason I ask is because we've seen pockets of risk pop up, even despite some of the weakness in August, namely just the overall crowding in the Magnificent Seven that hedge funds have been, kind of piling into that trade, even more of a tilt than they have historically.
They're chasing. That's what I told you guys at the beginning of this video. They're chasing, man. They're trying to chase those returns. They're lagging big. They went into this year way underinvested. They stayed super bearish for the first 4 to 6 months of the year. And they realized at the end of the first half of the year, they realized, oh crap, like we're in trouble. We're in real trouble. Like we are severely underperforming the indexes. This market's going risk on. A lot of these guys went short into the year, went puts into the year, went cash into the year, and the market just was rolling. And now they're trying to play catch up, right? So, that's quite a pickle. That's quite a pickle to be in.
Concern to you for the overall market sentiment?
Yes and no. I think people overstate the impact of these 7 stocks. I mean, what we have to keep in mind is, one, if anyone's going to be buying equities globally, the U.S. stock market remains the most liquid. As you know, outside the U.S., it's pretty much a small cap world anyways, small and mid cap. And the 7 largest stocks actually have great fundamentals. I mean, you know, not looking at NVIDIA's stock price reaction, look at the guidance changes. So to me, those are core stories to the U.S., the technology leadership, pretty central to both generative AI's future and the inflation problem. I think they're important stocks. I wouldn't be surprised if they continue to gain into year end.
So Tom Lee, he's on. I mean, it doesn't surprise me. Tom Lee would be bearish into year end, right? That should come as no surprise. So I'm bullish. It should come as no surprise. I'm a little bullish on a few stocks. I'm bullish on the Meta into year end. I'm bullish on Amazon into year end. I'm bullish on actually NVIDIA into year end, even though I have nothing invested in the stock as of right now. AMD, I think, could be decent into the end of the year, although their numbers aren't there right now. I think there's going to start to be a lot of excitement around AMD and what numbers they're going to put up in 2024, and if the growth estimates that analysts have out there for 2024 are far too low based upon what NVIDIA has been putting up for numbers, right? I think there's going to be some chatter about that, some talk about that. That could bode well. Apple, not really expecting much, maybe a 5-10% move up or down through end of year. Nothing too crazy unless there's something dramatic happens to the overall market. And so that's kind of my thought process around those. Mr. Softy just puts up their numbers, does their thing. I don't think there's anything super exciting going on with Microsoft either way. So, yeah. And then Tesla is a big wild card. They just have one hand tied behind their back right now, obviously, due to interest rates being in an elevated place. Cybertruck's coming. We know Cybertruck's going to start getting produced. It will start hitting the numbers big in 24, but it's not this year. So what do you factor in toward the end of the year? That could be kind of a shake-around situation. I think there's even a potential that Tesla could go down to year-end. We'll see what happens. But also on the flip side, you know Tesla's one of those stocks that if you need to chase performance, there's a lot of fund managers that, where am I going to chase? I'm going to chase in Tesla because Tesla is usually an outperformer, right? So that's where you get all these little movements around. Appreciate everybody joining me as always. Thanks so much, folks. Thanks for being subscribed to the channel. Hope you enjoy the channel. I certainly enjoy doing these videos for you guys. If you want to support the channel on Patreon, then do so with the pinned comment down there. And you get to see the moves I'm making in my Patreon portfolio, plus be part of that Discord chat that's over there in that one. And then this tier has a course along with it that you should get some good value out of. Much love and have a great day.